Good evening. The Bulls were back in action on the Lal Street, extending the January rally after taking a breather in previous session. The Sensex was up by 192 points to close at 16,643 and the NSE Nifty was up by 62 points to close at 5,018. Among the 30 constituents of Sensex, Sterlite, Tata Power, Hindalco, DLF and NTPC were among the major gainers. On the other hand, BHEL, M&M, Bharti, Infosys and ITC were among the losers. Among the BSE sectoral indices, the BSE Realty Index was the top gainer, up by 3.5%, followed by the BSE Metal Index, up by 2.8%, BSE Power Index, up by 2.5%, and BSE Banking Index, up by 1.8%. On the other hand, the BSE IT Index and the BSE Tech Index were down by 0.3% each. Meanwhile, the India VIX on the NSE was down by 4.4%. Today's rally was seen on the back of positive cues from the US market and the Asian market. Sentiment got a boost post encouraging economic reports on the US economy and well-received debt auctions in the Eurozone. Also, optimism is growing that talks between the Greek government and bondholders on a proposed debt swap deal will be positive. Another sentiment booster was reports that IMF was looking to strengthen its financial resources to deal with the euro area crisis and mitigate its impact on the global economy. On the domestic front, results were mixed. Bajaj Auto's numbers failed to enthuse the markets, while Dish TV and Mastech too disappointed. However, HDFC Bank, Godrej Properties and Hero MotoCorp delivered robust results. The food inflation stayed in the negative zone for a third straight week, but the inflation in the primary article group increased sharply. The central bank policy makers next meet on January 24th is fixed to take a call on interest rate. Much of the recent moderation in inflation is due to a combination of improved supplies and a high base, while the core manufacturing inflation remains sticky. There is a likelihood that food inflation might turn back up as the base effect starts to wear off. As a result, the RBI will most likely adopt a wait-and-watch approach at its policy meet on January 24th. The opinion on a possible CRR cut are divided at the moment. Shares of power companies rallied ahead after the Prime Minister promised quick action on resolving the crucial sector's problems. A pragmatic and viable solution would be found to the plethora of problems affecting the power sector. Top industry leaders with the interest in power sector met the PM yesterday to appraise him about the issues plaguing the power sector. Shares of PFC, NTPC, NHPC, Tata Power and REC were among the top gainers. Thank you. Wish you have a great evening ahead.